Peter Goodburn, welcome back to F.A.C.E.
Can you hear me, Dale?
Got you, buddy. How are
Terrific.
you?
Well,
Happy
good,
New
thanks.
Year.
Yeah, pretty good. How about you?
Doing okay, Peter. So you want to share your screen and tell us what's top of mind for you? We just got data dump and dollar selling off. I believe you're looking. You want to start with S&Ps? Okay.
Well,
Um,
we can
that's
start with
fine.
whatever you
That
like, really, but yeah.
that's fine. So still bearish. Some wave guys are talking 42, 4,300. I don't know what the count is that gets them
Mm,
there, but
mm.
you think that today could be a great selling opportunity according to this roadmap.
Yes, that's right. Well, I mean, the thing is that we've seen actually the back end of last year some quite different performance, haven't we, from say something like the S&P when you compare to what the Dow has done.
Yes.
And the Dow has
And Europe.
obviously, yeah, and Europe, of course, yeah. I mean, we're looking at sort of gains over, well over sort of 25, 28% in Europe from the lows. I mean, it's been really good. Dow Jones, something similar. The S&P and the NASDAQ really sort of underperformed since the lows in October, when the Dow was at, well, the S&P is at 3502. And overall, this swing up that you've seen end in December that I've marked up at 4180 is basically a zigzag. And from what I can see, the subsequent decline in December, this decline, which I'm flicking over to a short-term chart now.
Right. See it.
Yeah, good. And the 4180 decline down to this late December low at 3778 is a five-wave picture. And the subsequent rally that we're trading right at now is a three-wave correction. It's hitting a 61.8% retracement. I mean, it can always tip through that slightly. But when we look at the Dow's equivalent rally, it's at 76%. So it shouldn't really do much more. So I know you've just seen the numbers coming out on retail sales and stuff, but I mean, I don't think it's going to have an impact in producing any more upside because we're really stretched already. And so this is really on a sell signal from what I can see, and
Okay.
we're getting ready to start tipping to the downside. The only question now I have, which I'm asking myself as well as some of the institutional clients that we speak to, is, you know, what news flow is going to tip it down? Because at the moment, everything seems to be quite upbeat since January 1.
Yeah, well, we're starting to get some talk about the debt ceiling here in the U.S., but I'm curious because I know you still have a bearish count in the dollar that the capitulation for this wave down hasn't completed. Does that, in a way, change conviction at all in the S&Ps? Because normally that would be supportive.
Well, I think that probably you're going to find a dollar low any day now, because if that's the case and the S&P starts to roll over and all the indices start to roll over to the downside, wouldn't that necessarily suggest that the dollar's going to put in a low, and maybe then when the stock markets drops, we're going to attract a bit of safe haven buying.
Okay. So, but under par is still a potential target. So we're what, about 2 handles away, 3 handles away, 2.5 around from that number?
Seems like that. I mean, it's going to
Yeah.
have to sort of, I mean, they don't always top out exactly at the same time.
Right.
You know, they're not going to change direction at the same time. Let's put it that way. But so this might sort of overhang for a couple of days longer, but it should be getting closer. I'm not surprised that, for example, dollar yen, when we saw the Bank of Japan news overnight, sort of flipped up and then, of course, came careering right off again. You know, because basically that one also needs to complete 5 waves down, and
You're looking for a pretty good rally in yen once that happens with the dollar, right?
That's right. Yeah, I think the dollar will just go bid generally against all the G10s.
Okay.
I think they have to. So I'm not surprised to see the sort of suddenly this flip up overnight on the Bank of Japan here sort of turn down, because, you know, I think we need to get to that 125 handle at least minimum, you know, which is 3 cents away still. So we've got a bit to do on the currency side, but I think that that's a precursor to to some safe haven buying. And just looking at one or two surveys which came out the other day, and that is that the big overbought condition, which was running up towards the end of last year in the dollar, has completely reversed and has almost gone into sort of oversold mode. And that's quite interesting. You know, fund managers are really starting to talk about the fact that, you know, they're very bearish for the dollar.
Yeah, the banks, the major banks, I think JP Morgan, after, you know, 2-3 months of dollar weakness, have finally flipped to bearish. So as a contrarian indicator, one of my associates brought that up. So we're near inflection points in a lot of markets. You know, with the gold silver ratio still having more upside, your take on the metals, Peter?
Gold silver ratio, yeah, I mean it's an interesting one, that, because we've seen a bit of silver weakness, haven't we, since New Year, and that's produced the gold silver ratio sort of flipping up from here. So this was where the low was 75,
yeah, and
we're up to 79, and it looks like it might do a bit more as well before turning downwards. I think the main direction is downwards. We've actually I'm doing a bit of a plug here, but this chart is, this PDF report is our annual stock index part 1 series, and we do this every year. It's a comprehensive stock index report. It's part 1. Part 2 is going to be commodities, which we're finishing this week, and part 3 will be currencies and interest rates. But anybody tuning in, you can basically get this by just going onto our website. I'll explain maybe at the end, but what I'm really highlighting here is the fact that in part 2, which we're going to release this week, I'm going to be putting in a lot of ratios like gold, silver, gold, platinum, gold, palladium, and a couple of other switches. And for what this tells us is that gold is going to be a big underperformer during its next big bull market, which began in September. Silver is going to be outperforming generally. If we take a look at the longer term picture here, you can see that the ratio is going to contract after this flip up finishes. It's going to contract quite dramatically, and that sort of ratio decline means that silver's going to be much more expensive than gold in relative terms. But the other interesting aspect to all of that is that we believe that looking at the ratio of silver platinum, that platinum's going to be a big outperformer of silver. So, when you cast your mind and think, well, the gold bugs are pushing gold going long again. Well, they're going to be right this time. They've been wrong for the last 2 years, but they're going to be right now because we finished the corrections down from August 2020. But hey, why not think about buying platinum?
Yeah.
And, because I think platinum has got a lot more upside tack.
Well, I remember when it traded at a premium to gold for years and years and years.
Well, I'm of the same generation as you, because that's all I remember. So, when we take a look at sort of something like platinum going forward now, it's quite remarkable that it's cheaper than gold, quite a lot cheaper. And we know that history tells us that it's been, for the best part of its long-term history, at least premium to gold. So, and it's going to return back there. So I think that platinum's going to be a much better option going forward than perhaps silver or gold. But gold is going to be the sort of the poor man's precious metal in this next.
Do you know any platinum miners shares that could be considered? I know it's
well, I haven't. I must admit, I haven't looked at any platinum miners recently. It's a good idea to take a look. No, I don't. But I mean, of course, the obvious are good. Things like Impala in South Africa and whatever.
Okay. All right. So South Africa is besides Russia, the biggest producer of platinum.
I'm not sure whether there's a moratorium still trading Russian stocks.
Yeah. Oh yeah. Yeah.
I mean, the thing is, you're taking counterparty risk on that, aren't you? Really?
Yeah. Yeah. So do we have with these inflection points in the dollar some type of corrective levels once we peak here in the dollar in both silver and gold, for where there might be good entry points down the road while the dollar is rallying back to, looks like you're looking for almost 111 once we get this counter trend move. And it sounds like almost everything's going to go down during this, if you're right about the break in the S&Ps, rally in the dollar, and what correction in precious metals, correct? Is that the
Yeah,
narrative
that's
here?
right. It's difficult to know exactly how deep these corrections are. I've published a cycle, a composite cycle in the dollar index, and I've updated that. That will be in the commodities report published next week, and that suggests that we're going to be hanging off. This rally is going to take until almost July, actually, in the cycle. I was initially, from just looking at the Elliott structure, I was thinking that it might take until about April, but actually the cycle projects out to July, and in which case that normally would suggest that we have a deep correction. So so that's possible, but of course it means that there's going to be buying opportunities, aren't there? Going to be for precious metals again, because at the moment everybody's long gold, long silver, pretty much everything. But there's going to be some deep corrections at some point, then it's really up to us to try and figure out exactly the timing of and the price levels where gold's going to top out and complete 5 waves up from September, which is a mirror image really of just the dollar index decline. So if the dollar index has got another two cents to go, then you might as well hang on to your gold longs at the moment and try and take it up above 2,000. We've got at least another $100 to go before we need to think about maybe taking some profits.
Okay. And silver, even though it's the underperformer right now with the gold silver ratio, still has a new high in it. I noticed it was a double top, which means there are a lot of stops above this 24.5 level that they didn't take out yet.
Yeah, I'm also, I think platinum is a really good solid wave count from September. It's very clean. Here we have 1212, which is a fractal subdivision of the third wave, and yeah, it's I think if this breaks up a little bit higher, it'll probably take what you say about stops out, and then we'll come down in wave 4 and 5. We could compress the timing here, so don't take too much attention to that. But I'm watching platinum because I think it's got a much smoother, more succinct pattern up from September's low when it was down here at 816, and this could already be in a 4th wave and a 5th. So I'll probably I might be adjusting the gold count specifically to tie in with the dollar index and the platinum, depending on how they move, and we'll be updating our midweek reports twice a week on those, just to make sure that everybody's up to date. There could be some tweaks involved, but definitely we haven't got a huge amount left for dollar weakness to come through before we start seeing some turnaround.
People starting to get a little bulled up in the general commodity trade. People are getting bulled up with this recent rally in WTI, in crude. I know that you still have lower counts. Probably can we trade 90? Okay, there you go.
Yeah, we could get to 89, I think. Yeah, I mean 89, 90, that's very plausible. I mean the interesting thing about oil is that going down through the from the highs last March at 130.50, I'm just going to put in a thick golden ratio section. I'm going to extend this first downswing by 61.8. And if I double click, it'll project the 61.8 extension. But if I do that, you'll see where it comes in at.
Okay.
Bang, comes right in at the September low. Look. So that measurement actually qualifies as a zigzag, which I thought it was originally, ABC, and everything after would be an expanding. Well, everything after would be an X wave rally. I suppose it still could be to some extent, but the tipping point for me came when oil dropped down here from this rally in November, and it produced a very nice 5-wave pattern down to $70. And funny enough, this $70 area is about consistent for a fifth wave if we're not too critical about a couple of cents overlap of waves 1 and 4. If we get away with that, then this can be a justifiable fifth wave, and that would mean at least an attempt back to 38% retracement. You know, we just put the retracements in like this, and you can see the 38 number coming in. That's why we've got this. And I like the 38 number in particular because if you notice, this is the 23% number here. It's a bit obscured, but it's 23%. And of course, that's a perfect place to end the first swing up within this double zigzag pattern. And, you know, of course, it's a mathematical certainty that if you extend that by 61.8, you're going to get the same level. So we've got a really strong resistance area around $89, let's say. And that's where I think it's probably going before we start heading down afterwards. But oil is a bit of a funny one, and so is, you know, all the energy markets are not in exact rhythm.
How about the widowmaker, Peter? Natural gas. You guys in Europe have had summer and winter up until recently, and it's really collapsed. Any sign of a bottom in nat gas?
Yeah, I think there is. I mean, we actually called this really well last year because we thought that the markets would drop down and break this low, and at the time it seemed quite really fantastical. I mean, if you're looking,
no one, I mean, people were going to freeze and starve to death in Europe this winter.
Well, that's what the mandate was, wasn't it? That's what the propaganda was. But we got to 339. I mean, and here we are. We're over 80% down. And we did predict that, I have to say, really well. And we knew that this would have, well, we thought it would have a bigger impact on actually lowering the CPI. The problem is that CPI levels around the world are coming generally down because there's a certain impact on these lower gas prices. But food prices are going up still.
Yeah, I like the beans. They look great. I don't know if you're watching grains, but also I wanted to ask you, when we come to yields, will bonds benefit if we get this decline? Because last year bonds went down with the market, actually led the market. Will there be a divergence between the long end of the curve if we get that stock market sell-off that takes out the October low?
Well, I have to tell you that before I show you the next chart, the base case scenario that I had towards the end of the year, last year in December, was that if we're expecting another big downturn in the US and European stock markets, and when we're not talking about a 10% drop, we're talking about something close to 28%, the same sort of deal that we had last year from top to bottom.
Yeah, your annual report last year was bearish on the market from there. So that one you were, great work on the timing for that top last year.
Yeah, thanks. And so if we're going to expect that same situation this year and continue the correction down, my base case originally was that yields would probably drop in this case. They would break the previous correlation because before last year, while stock markets were pulling lower, yields were of course going higher. And so really yields were one of the big headwinds for stock markets because, yields were trending up while the central banks were hiking, and that's negative. I thought that it might switch around that correlation. That was my base thought at the end of December. But I've since relented a bit. And the main reason for that is because now this is a bit peripheral for everybody tuning in, because actually we've got a couple of tier 1 banks on our books, and they have very big exposure to Italy. And the Italian yields, the 10-year yields in Italy have actually started to, well, they're trending up very similar to treasuries, but they actually corrected down from late September, the same time as treasury yields did. But they bottomed here already in December. And since then, they've rallied in 5 waves up, which is confirming that we've actually got an uptrend coming through.
Okay.
Now that's really gonna really upset the markets, because everybody that I've spoken to in the bond markets are positioned in the opposite way. They're expecting lower yields this year, which of course was my base case originally in December, until I saw this rally in 5 waves up, and we got the same 5-wave pattern repeating in some of the spreads, in some of the generic benchmark govy bonds here in Europe, traded like the bunds. So my idea with treasuries now is that treasury yields are going to be screaming to the upside. They're not going to be moving down into a definitive correction. I think that correction from late September, which is comparable to what we've just seen in Italy, is pulling down like this in an expanding flat pattern. A, 3 waves up for B, 1, 2, 3, 4, 5, C down. So we got a little bit more yield play with the dollar coming down. But I wouldn't be surprised if this bottoms at the same time the dollar index bottoms, you see, and then starts suddenly turn up.
Okay, yeah, well, we're going to have to send your report to Jeff Gunlich, because you know, a lot of bond guys are saying this is you know, kind of a lifetime opportunity with yield. So this could be the wild card, you know, with inflation coming down.
Yeah, I mean, what you're saying is that, you know, you're just basically confirming that everybody's basically expecting yields to drop, aren't they?
Right. Yeah.
They're very overlong. I don't think it's going to happen.
Okay.
I don't think so anymore.
So we're only about 25 bips away from that 322, because last time I looked, we were about 347 on the 10. So
yeah, I think that's just come off with the that PPI and CPI news. So that's just pulling back now. So we've got a little bit of leeway there for that to bottom with the dollar index. I think as soon as that happens, watch out. I just I just getting various different signals. I mean, if you take a look at the Dow, which is a really good one, because of the fact that, you know, we've seen an expanding flat pattern from June, 3 up, 3 down. We break the low. It's a perfect 23% extension of wave A, so that gives us the signal to expect support down here. And I think I've even got I can show everybody what we forecast at the time. Here is a chart from our reports on October 5th, just soon after that low was reached, and we've jumped straight back up. We expected this 5-way development. I mean, we were a bit conservative. We thought, right, well, we'll talk about a running flat where wave C doesn't quite break wave A, but it did perfectly to the expanding flat pattern, and here you can see it now in its full glory. And then we get this big shock in 5 ways down from December, and a nice 3-wave rally. And yesterday, of course, you can start seeing with Goldman Sachs coming out with those poor figures, it's come right off, and it's already triggering a sell signal. So I don't think the others are far behind. It's just a question of now watching the news flow to figure out what's going to trigger this down swing.
Okay, do you think that the Dow, which has been the relative strength leader, will take out at the October low with the S&Ps and NASDAQ?
Yeah, it has to. I think we're going to go right the way down, well below the October low. Yeah, a long way. No, I think we've got a long way to go. So yeah, I mean, this means to me that one, I think inflationary pressures are probably higher than people think still. You know, we've got measures like CPI pulling down, but actually here in Europe, I don't know whether you saw, but Italy had CPI out figures yesterday, 11.7. 11.7, and the ECB overnight, Christine Lagarde has been saying, oh well, we may consider sort of pulling back on our incremental 50 basis point increases. I mean, they can't do that. They won't be able to do that. Are they crazy? 11.7% here in Europe. I mean, we're not talking about a third world country in Italy.
Okay, so you know, this narrative that you're presenting today, Peter, says that Powell, you know, the market's been calling Powell's hawkish language, and that he's crying wolf, and it doesn't have any teeth. But what you're saying about yields and your outlook for the market, The markets, you know, according to Powell's going to get his way and take markets down. And rates stay up during an earnings recession. What a toxic mix.
Yeah, it's going to be that same thing that we talked about towards the end of November last year, when we suddenly started to think about things like stagflation. You know, so you're getting prices of things, particularly food, as you've seen, still holding up really high. In fact, they're still increasing. The CPI component of food is still holding up.
When I get 10%. My paycheck, I'll buy you an omelet. All right. Anyway, Peter, you know, you're really do a great job of putting the whole financial jigsaw puzzle together. You mentioned your report. Best way for people to get a hold of you and tune into your work.
Well, thanks. Yeah, I mean, if everybody would like to, first of all, don't forget that our trilogy series, we've launched Stock Indices Part 1 at the end of December. We're going to be publishing in the next, well, 3 to 5 days on commodities, which is going to be really exciting. I've got some great new long-term commodity index charts going back to 1900 in the commodities report. If you want
childhood,
yeah, that ancient, huh? Wow. And you know, if you want to check those trilogy series out, go to our website, which is wavetrack.com, and just click on the news alert here, which is Stock Index Video, and this will pop up, and it will give you a bit of a precursor of what's involved in the report. We've got a 2-hour video in there. Actually, I think it's probably a bit longer. Oh, 2 hours, 11 minutes, yeah. And this is all the list of different contracts that we've got. But it'll also tell you how to subscribe to that one, and also the trilogy series if you want to do a package with commodities and currencies and interest rates, or you can buy them separately. And that's one way. And if anybody wants short-term updates, you can do that by just going into our subscription area here and clicking on that. And twice a week, we're updating a whole array of different contracts in the Elliott Wave Compass report. So it's $39 a month. There's no recurring sort of automatic renewal. So you don't have to worry about canceling if you didn't like it or anything. But it's $39 a month, twice a week. And that gives us all the short-term updates that you need.
Well, Peter, thank you very much for your giving spirit to come in and edify our community here in F.A.C.E like you have been for years, and appreciate what you do and root for you, and hope that this year that, you know, it's great for you and all your subscribers, and that pips just rain down on everyone.
Thanks, Dale. Well, the same to you. I really hope that this year is successful, and everybody listening in, that, yeah, just stick to the course of things, but be very aware that, you know, there's still a lot of volatility. It's great for us traders, but yeah, always make sure that you seek help from someone like Dale, because, you know, knowledge is very valuable commodity these days.
And you're a great example of knowledge and hard work, Peter. Thank you so much for being here today. I'll catch up with you down the road. Appreciate you,
Dale.
buddy.
Yeah, same to you, and all the best to everybody. Thank you very much.
Okay, Peter Goodburn, everybody. And you could join the team on the Morning Edge in 15 minutes. Remember, don't just count your pips, count your blessings. People are thanking you, Peter. And that's going to be a wrap for F.A.C.E. Good hunting the rest of the day. Adios. Thanks again, bro.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.